Hey everyone, and welcome back to FogCutter Live. I'm Mike Curtis here with Preston James, options trading legend, founder of Trader's Edge, and we are here to help you start the week off, cut through the noise and the chaos out there when it comes to trading in the financial markets. Preston, we got a lot to cover today with earnings front. There's more tariff news. Just say hello, and what do we have for them today?
I just hope you had a relaxing weekend because we're in for a really busy summer week full of probably the most important earning companies announcing earnings of them all, and fresh off of a new trade deal, especially with the European Union. It's really set the stage to start the week out.
Yeah, exactly. So really, four of the magnificent seven stocks are reporting earnings. We'll get into that. But yeah, what really has pushed the market into the green today was over the weekend, the news hit that US, the European Union kind of settled in on a trade deal that had been lingering and some indecision there. So that gave us a nice little boost to start the week. And Preston, maybe we just dive in with what the market's been doing these last couple of weeks. Because I was looking back. I usually watch the NASDAQ. I watch the S&P 500. I know that's kind of the two indices that you focus on as well. And I looked back just a little over the last month when we've made, we saw a little channel for about 2 weeks, and then we've really just pushed. I counted back, and I might have missed a day or two just going through this quickly, but of the last 24 trading days, the market's been up about 19 of those and down only 5. So we've just had this tailwind behind the market. When I looked, the NASDAQ was about 19,600 to where today we're at 21,150 or so. So the NASDAQ's covered about 8% in those 24 days. So
that's white hot.
it's white hot. You've been saying it's go time for stocks. We've been shouting out since the end of April. We saw that follow through day. It's time to get going again. And so, Preston, we were kind of chatting through the door this morning. When the market's covered a lot of ground like this, inevitably you're going to see a pause. You're going to see some pullback at some point. And we were kind of joking about, the financial news has got to throw a headline on it, right, to justify the pullback.
Endless headlines. Headlines every day, morning to night.
Right. And we were like, yeah, they're going to blame it. Hey, maybe the market doesn't like the EU tariff deal or, whatever. They're going to throw a label on it. But again, here at FogCutter Live, we want to help you see through that. Sometimes the market just needs a breather. Sometimes there's just profit taking that's coming in after 24 days of covering 8%, for example. So if we start seeing, a breather, if we start seeing some profit taking, we see a little pullback, we see some consolidation, sometimes that's not because of the headlines you're seeing out there. It's really just, hey, maybe we've covered a lot of ground and the market needs to take a break.
Exactly. And I won't be surprised too, after such a torrid run, that the analyst cartel is not out there copying each other, because they're kind of, well, I have some theories why I call them the analyst cartel in the first place, but very highly paid. They like to copy each other, but I wouldn't be surprised if this place where more upgrades will come in.
Right.
Where were the upgrades back in April? Where were the upgrades helping out the average investor?
Right.
No, they tend to just kind of pile on and copy each other.
Right.
So
in April, they were lowering guidance for, hey, we think the S&P is only going to get to here by the end of the year. And then, the market puts in a bottom, starts rallying, and then a month and a half, 2 months later, you start hearing, oh, we're going to adjust our projections back up. Now, hey, we'll adjust it back up. It's like, well, you missed 2 months of a rally.
These are the best educated in the Ivy League schools, the ones that have suits that most people won't ever be able to afford. Yeah, this is the well-heeled, educated class
Right.
going for it. Yeah.
So anyway, hopefully here at FogCutter Live, we can help give you a little more dose of reality, help you manage your trading with a little more clarity. So let's flip the page. Let's start talking about what we got this upcoming weeks. Not only is it really busy, maybe one of the bigger weeks earnings report wise, earnings season wise, but we also have a ton on just the economic front as well. So
Mhm.
Wednesday, the Federal Reserve meeting, right? Well, they'll have their meeting for a couple of days and they kind of announce if there's any change to the interest rate policy. Right now, everything's kind of expected to not see an interest rate cut, but of course, President Trump's been applying a lot of pressure there. So we'll see if there's any surprises that come out Wednesday. The first Friday of every month, which will be this Friday, is our jobs report, non-farm payroll, unemployment report numbers come out. So on top of all the earnings that we'll get to here in just a second, just a potentially pretty big week on the news and earnings front that could
Yes.
bring some volatility.
Well, I'll add also Thursday is the PCE numbers, and this
Right.
is another high impact potential impact to the market because it inflationary things are read or not read in that report. And I'll just mention too that the Wednesday FOMC meeting, this is during market hours. So it's always interesting. They meet during market hours. And the Thursday and Friday important news, like you said, the unemployment on Friday, the PCE on Thursday, both of those come out before the market open. I just think that's kind of interesting to add because the market will react to the Fed minutes, whatever they decide interest rates. There's 2 hours. It happens at around 2 p.m. Eastern. So there's still 2 more hours of market time to digest what the Fed has just decided.
Yep, you always see some volatility, usually swing in.
Yeah.
Sometimes not a whole lot happens if it's just kind of a ho hum, nothing to see here announcement, but they change even just one or two words in that kind of future forecast or what they're looking to do, that policy, and it can have a ripple effect for sure. All right,
And
well, let's talk. Oh, go ahead.
well, I was going to say, like, and then the earnings are just sprayed out everywhere. And while earnings are obviously unpredictable, we don't know what they'll announce until they do. And not only are they announcing for the most recent quarter, they're also issuing guidance going forward.
Right.
Um, so there's a lot of unknowns, but Mike, I just want to add that there's one thing that is known compared to the last time we did FogCutter, which was last Monday, to today. Do you want to know what that is?
Of course. Yeah, hit me.
We're 1 week closer to football season. That's what is sure.
Absolutely.
I just
Yeah.
wanted to put that in. Well,
Training camps are in full swing. It's got to put a smile on your face.
oh yeah,
My younger son started his football tryouts last week. So yeah,
so
football
fun.
season is in the air. But yeah, let's talk about the earnings calendar, Preston. I know you got a bunch. We called out so the magnificent seven, right? The tech giants. We got Microsoft and Meta on Wednesday after the close. Hey, Microsoft, Meta, and then we've got Amazon, Apple Thursday after the close. So in 2 days,
Hmm.
you look at the combined market cap of just those four
Oh,
companies. Those are the 800-pound gorillas stomping through this earnings calendar this week. That's definitely going to have an impact.
those four that you mentioned, Apple, Amazon, Meta, and Microsoft, are nearly 20% of the S&P 500.
Yeah, it's wild.
If you add Tesla and Google and whatever else in there, it's 25%. So every time you see the S&P 500 clicking around, seven companies are a quarter of that entire index of 500 companies.
Yeah, so you got to pay attention to those when they're
Yeah.
reporting earnings. I mean, even tomorrow, Tuesday, is a big day with Visa, Starbucks, Booking. There's a few others that are lighting up tomorrow. But any others that you have your eye on, Preston, as far
Yeah,
as
I
the
mean,
earnings calendar?
Spotify's out tomorrow morning as well. There's one company that I think that's very solid that's very backbony behind the scenes with all this AI rollout, all of this. And it's Corning, which is GLW. And they've got weeklies. And of course, I before we mention some more earnings, because there's so many, Mike, I just want to be clear also that we're not talking about guessing or trading in front of these earnings announcements. Why it's such a big week is because uh, we believe there'll be a real tone set from this week once you see what Amazon's earnings was and their guidance. Apple, the same thing from these big companies, Microsoft, Meta. This can be a real tone setting week, which will help give us an edge. We very well might be starting trades because of what happens this week. And so we want to always be aware when the earnings announcements are, but it's not to trade in front of them. It's to get edges going forward.
Yeah, no, that's really important. In fact, kind of our question of the week came in, and it could probably lead us down to a little bit more involved discussion on that front. But the question was, we're in the thick of earnings season. How do you know when it's safe to enter a new trade? Are there any green light signals I should watch for? So, let's just talk through our bread and butter, the money press strategy. So, Preston, I know you kind of have a rule of thumb, right? Because the money press, it's built by generating weekly income, selling premium, selling options, generating that weekly income. So is there a set number of weeks that you like to have before that earnings announcement that you'd be like, hey, I got to have at least this much time before earnings to start a new money press?
Minimum 2, but it's rare that we even do that. What I love to do the most is wait for an earnings announcement. If there's a surprise factor created or a setup, we have a setup called the surprise factor. But if we get a green light because the crowd is responding, in a powerful way to the most recent earnings, what's fun is there's 12 weeks until the next earnings announcement, and ideally it's after the earnings and maybe not that very day. Sometimes if it's really pronounced, a gap up, huge volume, inevitably there could be some profit taking in the next few days. But it definitely goes on the list, and where it goes in the kind of the green zone. Like, man, we're just counting down the days to trade this. So we don't want to start a money press and realize that earnings are right, in front of it in 3 days. And also, I noticed this week both MasterCard and Visa announced earnings. Well, American Express has already announced earnings like a couple weeks ago. It's important if you're considering, if American Express is everything's lining up and like, hey, I'm really watching this to do a money press, you also should be aware that Visa and MasterCard's earnings are this week.
Right.
They're those leaders of the financial of their category. You should be aware of other companies like Qualcomm is announcing earnings this week, and Lamb. Oh, why is some of these some big chip names like Monolithic Power Systems, Lamb Research. That's what it is. ARM, ARM. So if you were considering trading a semiconductor or chip name that's already announced earnings, and all these big names are announcing this week, you might want to wait also for most of that to be announced, so you're not really surprised by anything.
Yeah, definitely. So really good, important point. If you're looking to start a new money press, you like to have at least a few weeks to let some of that income build, give the trade a chance to develop before earnings. Because typically, Preston, what we tell people, if you're newer to the money press, if you're a little more risk averse, just close it before earnings, right? Earnings is when the stock is usually going to move the most of any other date on the calendar, right? That's when all eyes are on it. Investors are watching, they're listening. It pulls in all this attention. It's usually some of the biggest volume days of the year.
Mm-hmm.
And it also, and of course, that volume can lead to the most volatility, and it's just an unknown. We've seen companies absolutely smash their earnings expectation number, but then the stock just takes a gap down. It gets hammered, and people are thinking, what in the world happened? Like, I've gotten these emails, or we see them on our forums, or it's like, why is this stock getting beat up? Well, they're predicting out their guidance into the next quarter is a letdown. So even though they just had maybe the best quarter they've ever had, right? The market's always a forward-looking vehicle. And when they look out into the next quarter and they say, hey, it might not be so great, we're going to have to dial back the expectations for next quarter, the stock can just get hammered. So the point is, to avoid that unpredictability, to avoid that volatility, a lot of times we'll just close those out, let the earnings announcement get out of the way, and then we can look to see, we can resize it up and see if it's something we want to get involved with again.
Yeah, you can jump back into the very same stock and get started with a brand new money press. But if there is that doubt, or maybe the edge is gone now, well, that gap down, that doesn't look that good. It's a chance to change horses and jockeys. Hey, this other sector's picking up. I'm going to go over there. And it's one of the benefits of being an individual trader.
Yeah, we can be so nimble. We can be in and out. And really, Preston, like, I know for me, and maybe you could speak to this, when we come into the earnings season like this, and you kind of spoke to it just briefly, but it's really a good opportunity to size up what positions you're in, kind of step back and give your whole portfolio kind of fresh looks, get some fresh eyes on it, and say, hey, this one's been underperforming with the market hitting new highs and a lot of these a lot of these companies hitting new highs. Maybe there's a stock you've kind of been hanging on to, or position you've been hanging on to that's, just been an underperformer. It can give you a fresh opportunity to look through your positions. Any thoughts on that?
No, it's true. It's, none of these rides last forever. And yeah, earnings is a great spot to cause you to reevaluate. Can I mention another stock that
Sure.
has really got my attention today, especially because of the EU tariffs? ASML. It's out of the Netherlands, and it is basically, if you keep asking and going up the pecking order of semiconductor chips and so forth, basically this company makes the equipment that makes making chips and semiconductors all possible. It's kind of like the Godfather just sitting up. It's like ultimately answers. You keep going to the top, you get the mob boss, you get the president. Well, if you do it in one of the hottest sectors, it's ASML. And recently they kind of fell down over their last earnings announcement. And a lot of it was due to this uncertainty about tariffs. I mean, that's just been a reality. And I just noticed that they really responded over the weekend to this new EU, because it's in the Netherlands. It's over there, part of the EU. And it's got weeklies, but I just think, is it ready to trade right now today? No, but it rises up my list significantly because rather than saying, I want to trade the next Microsoft, I'd rather trade Microsoft.
Right.
And that's what the money press allows us to do as well. Because as soon as we're not touching an $800 share of stock, we're doing option strategies on an $800 stock, but we don't have to be the size of a mutual fund to go touch these $800 stocks. So that's another reason I like it, but it's just something I'm taking a look at here today.
No, that's great. Another good one to put on the radar. So
Yeah.
Wrap up the earnings discussion. I like to relate this to like the 2-minute offense right before halftime or at the end of the game, right? You have to be a little more dialed in, a little more on the edge of your seat. Make sure you know your earnings dates. Make sure you know if it's confirmed or unconfirmed, because a lot of these websites that track earnings, they'll throw a date out there, but sometimes that's unconfirmed. And by the time the company comes out and actually confirms when that earnings is going to be, they could catch you off guard. It could be a few days earlier than what that website was saying, or it could be a few days or a week or two later.
Hmm.
So check those earnings dates, put a little check mark next to your list or something if it's confirmed. If it's unconfirmed, keep an eye on it still. Make sure you're keeping an eye on all those earnings dates. Gives you a fresh opportunity to size up where you're invested, what positions you have going on. And then for me, it's just opportunity for new exciting positions to just pop up when they have that earnings announcement gets behind them. It's in the rearview mirror, and there is a new setup or some excitement that comes into that particular stock. It can be a great way to get some new positions going in the mix. So
Exactly. And you can take the other side of this and say, oh, the earnings, I mean, they're so unpredictable. I can't believe it. We got to put up with this. But this comes with having a regulated market. Our markets are the envy of the world. And to be able to get listed as a NASDAQ or an S&P 500 company, the reporting and the transparency is numero uno. And this is part of transparency and part of trust, where these companies are coming every quarter to the table and laying it bare. And
right.
if they're ever revised or if there's ever any shenanigans, they're risking being delisted from these exchanges and losing out on unimaginable amounts of money and prosperity and having your name tarnished. And so there's a system and just that just works, and earnings is a main piece of that. And I love earnings announcements. But like you said, Mike, you first and foremost, you need to know when they are and make sure that date is confirmed.
Yep.
And whether it's before the open or after the close, because hardly any of them let's just say 0 of them are announced during hours. And
Right.
maybe that's a traditional thing too, but you want to know it's before or after as well. I write them
Usually
down
see
on a calendar. I'm a blue ink on a white page calendar. I have to write them down with my blue ink, and I've got my calendar. This is right here on my desk. This is like the most important thing.
yeah, and that's a good point, because if it's you just see the date, July 30th, but if it's before the open, you really have to be taking action on the 29th.
Oh
If you're going
yeah.
to close that position down and miss the earnings volatility, you got to make your move the day before if the earnings is being released before the open. So really good tidbit on that. So Preston, I think we got people loaded up to attack earnings season with a little more confidence, a little more optimism that there's going to be some things popping up they can take advantage of. So I think as we wrap this one up, we had a fun highlight from just one of our clients that we wanted to shout out, our little client spotlight of the week. This is Richard from Ohio, Richard H. And one of the things we love about the Money Press, we talk about just the weekly income, and he speaks to that in his comment that he sent. He said, I really like the consistency of the Money Press method. Rather than swinging for the fences, buying long and hoping there's some huge upside explosion, the emphasis is aiming to score base hits, base hit after base hit after base hit. And then you're just stacking up the wins, stacking up the runs. And I love it. He said the higher percentage win rate, and it definitely adds up over time. That was Whitey Herzog. We love the sports analogies.
Mm-hmm.
So he said that was the Cardinals winning the 1982 World Series. That was kind of their strategy. And he said, of all the trading services I have checked out, this one is by far the most consistent and profitable. He said in just about 3 months of doing some paper trading, but then also jumping into live trading, he's made back triple of what my overall total investment into Trader's Edge has been so far. Great method, time to celebrate. So well done, Richard. Thanks for sending in the kind words. We sure appreciate it.
Sounds like Richard's just getting started too.
Yeah, absolutely.
Good job, Richard.
And it's fun. It's really infectious feeling the energy of our clients that maybe some of them are brand new to options. They've never traded before. Some have been trading options for 20, 30 years. We've had stockbrokers that didn't know how to trade options come through Trader's Edge and learn the Money Press and some of our other trading strategies. So it's really fun to see people learn it and see the opportunity that swerves in. Again, if you want to follow Preston's trades, what Richard is really being a part of is our insider membership. So you can go to freeinsidertrial.com if you want to check it out, see some of Preston's trades, follow along, freeinsidertrial.com, and you can dive in, start getting some live trades going, just like Richard. So another good one, P. Anything as we wrap this one up?
No, I mean, I thought that was really solid. I'm super excited to see this week unfold. I think if anything too, it just, all this just like kind of keeps you young and curious. I mean, what new companies are vying and, covering ground. And it's, aside from the money, it's just very fulfilling to just kind of feel plugged into what the world's really doing. There's so many fake headlines and you wonder what's real anymore. Well, it doesn't get any realer than a quote on a stock and where it's gone from and where it's going. I don't know, kind of feels fulfilling that way as well.
Yeah, for sure. It's the purest test, right? It's the market's determining this is the value right here, right now.
Yes.
We love it. It's a ton of fun. So thanks again, P. We love helping people with these start their week with some fresh insights. The feedback's been awesome from these, so we appreciate everyone sending in some great feedback
You really do.
on the FogCutters. And make sure you subscribe to the channel. That way you won't miss any of these. And we'll catch everyone next week.
All right. Take care, everyone.
See ya.